Hello and welcome to today's episode of Pivot to Profit, where we help entrepreneurs just like you keep more of what you make. I'm Pam Jordan, your host, and today I'm joined by tax guru and expert Alexis Sidney.
Hey everyone, how are you today?
Let's do it. Let's do it. So, our topic for today is payroll, when to do it, when not to do it, who needs to be on it, and all the questions around that. But before we dive in, if you're a CEO, founder, business owner who needs to better understand your numbers, wants to know where's my money going and why don't I have more of it in the bank, you just need that financial accounting help, that tax help. Please let us help you. Our company is Pivot Business Group. Just go to pamjordan.com to schedule a call with our team. We would love to help you with bookkeeping, fractional CFO, tax strategy, and of course, tax filing services. All right, Alexis, are you ready?
I'm ready. Let's go ahead and get talking.
All right. So payroll is this crazy thing. We've done other podcasts where we talked about entity types, where which entities needed payroll and when a payroll owner could be on payroll and not payroll. What are some common mistakes that you see entrepreneurs making when it comes to payroll? Because there's a lot of them.
Right. So, two of the ones that I see often is either they're paying themselves way too much money. And I'm like, why in the world are you paying yourself so much money? And the other one is that they don't pay themselves enough money. And it's like, why run payroll? You only pay yourself like $6,000 for the year. Like, really? How do you live off of that? So, those are the two that I see the most.
Got you. And on the profit side of things, on the with my CFO hat on, there's two mistakes that I see. One is you can always make more money, but you can't make more time. And what I see is entrepreneurs and founders trying to manage payroll on their own and not outsourcing it and not getting help. And they're bogged down on a Friday afternoon trying to run payroll when they could be out on a sales call or delivering services to a client. And so I find a lot of business owners try to do it in-house and themselves, and then they get in a lot of trouble. I've literally FaceTimed with a client who was sitting in her car while she was trying to run payroll and something wasn't working right. And I'm like, why are you the CEO of a multi-million dollar company sitting in your car running payroll right now? Like, we need to work out a system so it's not you. And she laughed. We got her payroll run, but like the next time around, she
Right.
wasn't running payroll. And then the second mistake that I see is payroll is often the biggest expense for most of our clients. And most of you listeners, payroll is probably one of your top five, if not top two expenses that you have within your business. And that I'm talking about employees and contractors and all of that. But it is a huge area of waste. When we do an expense analysis, I find that payroll is costing you a lot more than you think it is because your team is not being effective and efficient with their time. They're not running at full capacity. They don't have the systems in place to properly do their job. So it's taking them longer to do things. So if you're a business owner and you have payroll and you look at that number and it hurts when you look at it, let's talk about ways to streamline that because it is costing you a lot of money and you probably aren't getting your team performing at a highest capacity. So those are mistakes that I see on the profit side with payroll.
Yeah, I agree to that. I think for us on the tax side of it, because you put your CFO side on the tax side of it, I'm like, okay, what is this costing us? All the payroll taxes and all the different fees and all the stuff that goes into actually processing it, that comes out of your profits for your company. And I'm like, okay, let's figure a way to reduce this if possible. We always try. And make it work and streamline that so that you can put more money back into your pockets. How about that?
I love it. I love it. Okay, so we're going to start our discussion on payroll with the difference between a W 2 employee and contractors, like 1099 contractors. And it is amazing how many entrepreneurs are doing this wrong. And it is amazing how much it costs you to fix it or if you get caught doing it wrong. So, why don't you help our listeners understand the difference between an employee, a W 2 employee, someone on payroll, and a contractor. They are not the same thing, Mr. or Mrs. Business Owner. And if you are doing this wrong, it will cost you a lot of money. So let's go, Alexis. What you got?
Well, yes. Well, thank you for emphasizing that because I can't tell you how often people I talk to and they're like, my employees. And I'm like, you have employees or contractors? And there's always a misconception of contractors versus W-2. But nonetheless, a W-2 employee is someone who you have them on payroll. You control their schedule as far as, the work hours and things of that nature. They have tasks, they show up to work. You're doing withholdings. You may be offering them retirement benefits, different things of that nature. They're full-time, part-time, all of that great stuff to keep it easy, breezy, and simple. A 1099 contractor is someone who is a contractor for your company. They are not an employee. Ideally, you cannot set their schedule or require that they be at the desk 9 to 5. Typically, most contractors provide their own tools to work with. So you're not giving them, unless you may need to for a specific project. But typically, they show up with their own tools, ready to work, ready to help support you. The biggest thing with the contractor is there should be a contractor agreement in place. You're not withholding taxes from the contractor's pay. So they're submitting an invoice to you on the frequency, typically is weekly or monthly, according to your agreement, and you're paying the contractor. So those are the differences primarily between the two. And the IRS is very strict on the two because we know that some business owners like to avoid the costliness of payroll and having employees and try to avoid paying FICA taxes and all of that great stuff and just say, hey, I'm going to get me some contractors and take the easy way out. So that is the difference between the two. And then note, like I said, the IRS does have a whole publication out there on what determines a W-2 employee versus what determines a contractor. And as Pam has alluded earlier, that it can be costly if you get caught and you're audited and the IRS deems your contractors W-2 employees. Oh, I can't even imagine. I don't even want to imagine. How about that?
It's expensive. We had a
Yeah.
past client who, because they thought it would just be easier to have everyone on their team be contractors because they didn't want to deal with payroll and the payroll taxes, they just had everyone on their team be paid as 1099 contractors. The problem was they were requiring them to show up and leave at certain times. They were dictating their schedule. They had company emails. They had to track their time. They were publicly facing as employees of the business, even though they were contractors. And what happened is the state that they were in, one of those contractors got fired because he wasn't doing his job. So he goes to unemployment because he wants to file unemployment because he just lost his job. Well, the problem was he was a contractor, not an employee. You do not get unemployment if you're a contractor. And then the unemployment office started asking questions. And this particular state has some pretty crazy labor laws. And they asked enough questions and he answered them the right way for them to do a full-on investigation of this client. They were a brick and mortar retail location. At which point, they deemed that everyone that was listed as a contractor was, in fact, or should have been an employee for the last 7 years. And because they were contractors instead of employees, no FUTA, SUTA, Medicare, unemployment taxes had been paid. So this state penalized them for years of back employment taxes. Now, did the contractor / employee have to pay it? No, the company did. The company is currently settled for multiple 6 figures in back payroll taxes because they thought it would just be easier to have everyone come in and be contractors because they didn't want to deal with payroll. And not only that, they also got dinged because the people were contractors and not employees. They were not paying overtime. So when there were people in the location more than 40 hours a week, Monday through Sunday, they were not getting double time or time and a half. So the particular state that they were in dinged them for that as well. Needless to say, they will be paying that settlement to their state for misclassifying these team members for years.
Oh no.
Years. Yes. So that's crazy. We had another client recently who had this set up wrong, and we were able to quickly come in and identify it. And we're not HR gurus. We're not going to do employee handbooks and all that, but we can for sure tell you how you're identify how you're compensating your team.
Wow. I don't know what I would have done. I just
Yeah.
hey, just go out of business. I don't start over.
Filing bankruptcy
Wow.
was on the table. Let's just say that. They were able to negotiate the fines down, but it was definitely a concern. So the biggest piece here, y'all, as entrepreneurs, we need a team. We need people that can grow our company, help us scale, but you need to make sure that they're classified correctly. If someone is working solely for you full time, they're probably an employee. If they don't help other clients, they're not a contractor. Make sure that you classify your people correctly so that you don't get one of these awful horror stories, because there's a lot of states out there that will come at you.
Right, definitely. And then definitely, I think to add to that is just understanding the different states because we all know California, they're special. Nice, gorgeous, beautiful state, but they really have some very powerful employee labor laws. And that's one of the states, even if you do have employees or contractors, it gets really iffy as far as them being employees and contractors versus being in the state of Georgia. It's a little bit more lax. So you just really want to understand what you're dealing with, especially as we're outsourcing and working with contractors. We're more prone to work with people all over the United States. So the state law that you're in may not apply if you're working with someone in California or Connecticut or Florida. You just really need to know and be privy to those laws so that you're protected at all costs.
Yes, agreed. Where you are and where they live matters. Okay,
Mhm.
so let's say that we've got an entrepreneur and they've determined that they're ready to add payroll to their business. What does that look like? What do they need to do to say, yes, I'm going to pay myself. Yes, I'm going to hire some people? There's a lot that goes into that.
Yeah, it's fun. It's called getting payroll set up for your business. So definitely, I always take clients down a journey per se, and just determining like where are we? Is it going to be just one or two employees, or are we talking 15, 20 plus employees? Because they do have payroll systems such as Gusto, that you can use or Sure Pay, and they're good for small business owners. Even Square, I believe they have payroll as well. And they work for clients, but you just need to determine like, hey, am I going to be the one wanting to be responsible for this payroll? Or do I just need to go ahead, bite the bullet, pay someone like ADP or a big company to say, hey, I'm going to submit the hours, or I don't even have to submit the hours. The employees are clocking in using the timesheet. They get the hours. I just need to approve the report before we process it and just go on about my business. So we need to determine like the complex of the payroll and the volume to see if it makes sense to either self do it, get it automated, or let a big company handle. But nonetheless, just getting started is figuring who's going to be on payroll. The 1099 contractors, do we have employees or contractors, and getting them set up the right way? Most of the systems are very user friendly these days. So we don't have to do a lot of data and keying in. We can just add the people, the team members, and they get the information. We want to collect the right forms, W-9s for contractors, for employees, I-9 forms, all the technical stuff the IRS requires us to have. But definitely outside of the data collection part, As a business owner, you are turning on withholding accounts with the state you're in. So we need to go through that process of creating these accounts, setting them up, getting the withholding numbers, because all of that needs to be entered into the payroll system. And if you're paying employees in different states, you have to have withholding accounts for each state that requires withholding taxes. So nonetheless, all of that stuff needs to get set up. Of course, you should already have your IRS numbers set up. We have to turn on not self-employment, but unemployment insurance. Definitely, workers' comp becomes a thing depending on the level of your company and who's all involved. If you're considering retirement options, we have to have that conversation as well. What does that look like? So there's a whole lot to talk about when it comes to setting up payroll. Nonetheless, we can help support you get through it if need be. But there are a lot of things that go in. But once it's all set up, once all the accounts are created, once everything is done, you have a payroll system. You have to determine, vacation packages, overtime, like time off, because all of that needs to go into that system for you to be able to monitor it correctly. But nonetheless, once it's done, you can simply go in, pay your staff. You can determine if they're getting direct deposit or if you want to paper checks and hand them out on Fridays, totally up to you as well. But it's a lot that goes into setting up payroll before the money hits your employee account or even your account if you're paying yourself through the company.
Yeah, taking on payroll has a lot of steps and it's not something to do lightly. And I think that's why a lot of people just say, oh, I'll just have contractors because they don't want to have to jump through all those hoops. And as long as they are, in fact, defined as contractors by the IRS, you're fine. But once they cross over as an employee, you got to roll up your sleeves. And there's a lot that needs to be done. And I strongly recommend that you use a payroll processor to help you. Gusto is one that we use a lot. But to Alexis's point, if you live in Georgia and you're hiring someone in Florida, you now have to be registered for withholding in both states. And that's not an easy thing to do because all 50 states have a different process to get withholding numbers. And there's companies out there that can help you get those numbers. But just know that thinking that payroll is easy to set up is a lie. Payroll takes a lot to set up. And there's a lot that gets added onto it once you check the box that say, I am now going to process payroll for my employees. The workers' comp, like Alexis mentioned, the insurance that's needed, retirement plans, benefits, employee handbooks. Like there's so much that gets added. Is it worth it? Absolutely. If you're going to grow and scale your business, because it's all about getting the right people on your team, getting them in the right seats, making sure they're doing the right tasks and helping you achieve whatever your goals are. However, payroll is not something that can be done wrong and expect to just get a slap on the wrist. Payroll is a huge, huge thing that the states and federal government will come after you if you do not do properly. So make sure that you have someone helping you do this. There's lots of payroll services out there. Make sure someone's helping you because you don't want to spend 8 hours on the phone with the IRS because they say that you didn't file a form on time.
Right. Yeah, that's key. I've dealt with a lot of payroll audits. So you just definitely need to understand what are your responsibilities as well. Because it's not about just saying, hey, I'm running this payroll. You want to make sure that the money is getting to the IRS that you're withholding and not in your account, and it's not your money. Those are trust funds. And you just really want to make sure that the paperwork are fine. I've seen so many payroll audits with people in the past where the monies haven't gotten to the authorities, but they withheld them or supposedly withheld them from the checks. And that's a huge moneymaker for the IRS in the state. So you just want to be careful of that. And even if you're using a payroll provider, I always tell clients that you definitely need to be educated enough to know, like, hey, let me check and make sure, because I've seen mistakes with big payroll companies as well, not following it, and the client gets a nasty gram letter or penalty and things to that nature. So just be educated as a business owner and knowing, like, make sure everything is getting done behind the scenes.
I love it. I love it. So let's talk about, you said the mistake that you see often is paying yourself too much or not enough. So there's something called a reasonable compensation. Help us understand what that is and how to determine what to pay yourself as the owner of the business.
Yeah. So reasonable compensation is what it's called, reasonable comp. We know that I always tell clients like, hey, we are small business owners and we may not be like a Fortune 500 company where we can pay ourselves millions, although we want to. But nonetheless, when we talk about reasonable comp, we need to look at what we're doing. And I know as business owners, this is how I explain it to clients, we wear multiple hats. So sometimes, although I have an admin, I may be an admin, put my admin hat on at times. I may put my website development hat on, my client consultant hat on, and all of those are different roles that we're doing. And we're allocating certain amounts of hours of time doing those roles throughout the week. So definitely when we do a reasonable compensation or put one together, because I know I'm wearing multiple hats in my role and I'm not just showing up as the director, it's like, hey, I'm showing up, I'm at the golf course all day and I'm showing up and I get paid my big salary. But I take into account like what would a typical admin get paid? And I average that based on the number of hours I spend in that role. What does a consultant get paid? I average that. So we use a reasonable compensation study within our firm to be able to put together a reasonable salary. And it's documented and it has IRS codes and all of that great stuff so that if we were ever to get audited, the IRS will see the study that we did to determine the salary of, let's just say 45,000 or 85,000 for the year, and not saying, hey, you should be paying yourself 200,000 because, if you worked at Google, this is what they would pay you. But it's a little different. So that's how we determine and develop a reasonable compensation study. But again, we just essentially are taking different job roles that you're doing, what you're touching, putting it together, identifying an average rate of what that salary will be, and averaging to get you a reasonable compensation. How about that?
I love it. And I love how we do it because it looks at the role of the entrepreneur as a whole, not just as one. Oh, you're the CEO of your $2 million business. Okay, well, here's the going rate for that kind of salary. But it looks at, okay, how much of your time is admin? Because like it or not, even the CEO of a $2 million company, you're still dealing with calendar. You're still dealing with meeting notes. You're still dealing with your email. That's a different rate than when you're sitting at the board meeting or leading the team's, leadership, whatever. So when you break it down by the roles that you're playing, it's easier to be clear on what your compensation should be. Because if you pay yourself too much, you're overpaying in taxes. So help people understand that, because I've had entrepreneurs come to us and they're paying themselves $300,000 a year, W-2 payroll. And I'm like, stop doing that. We're paying in taxes.
Yeah, I see it a lot too, and I always chuckle because I'm like, you can still get extra money without having to do all of this if you need it. Let's figure out some strategy. But yeah, I see people pay themselves $300,000, and it's like, yeah, it just feels good on paper, and I'm like, okay, great. Um, I hope the taxes feel good too. And then there's also a thing with being capped out with the FICA rates and just different things of that nature. So we want to take that into consideration as well. We also want to take into consideration like if we're going to do retirement, because we want to factor that in with the salary. Now, there is strategic things where it may make sense to take a higher salary if we're doing some advanced strategy with retirement planning, because the more salary you have, the more you can contribute. But just for, our average, business owners who just want a salary and, be in good standings with reasonable comp, you definitely, want to keep in a line and just, like I said, have a reasonable salary, because it does make a difference. You taking a $160,000 salary out the company and paying FICA taxes and things of that nature is going to take more money out of your company profits. Where it's like, hey, I really don't need all of that on paper, but I can still get some of that in the form of a distribution or dividend depending on how the company is structured and set up. So that's why we like to have those conversations with clients because it's like, hey, what if I can cut your payroll costs down and reduce your salary, but you still get the money you need and it's tax free, or we figure out strategy behind it and you don't have to pay in taxes as much. Like, isn't that a win? And most of them are like, yes, let's do it. So that's the approach that we take here. And again, we determine, a good salary for you based off what you're doing and just do the math behind the scenes so you can truly see the savings.
Yeah. And I think the point that as the CEO, founder, owner, your compensation doesn't have to be just your W 2 wages. It can be a combination of W 2 wages, tax strategies like the accountable plan, the Augusta rule, kids on payroll through a management company, but then also profit distributions. We do profit first with most of our clients, and there's a great methodology to make sure that there's money sitting in a profit account for you as the owner. But like your paycheck doesn't have to be your only compensation. And what that split is depends on what your goals are and what your business can afford. So we've got some clients where 50% of their wage comes from salary, 50% comes from distributions and other tax strategies, and other clients where it's 60-40, 70-30, like based on the reasonable comp plan plus what your lifestyle requires, we can be creative to make sure that you're still paying for your lifestyle and you're not suffering at home as long as the business can afford it. But it doesn't have to come through just W-2, because remember, when you have a W-2 payroll, part of your paycheck gets deducted and goes to taxes. And what Alexis is saying is if your compensation is at the higher end, you're paying more in payroll taxes than you should be. And so by doing these compensation studies and looking at splitting your personal income between distributions, tax strategies, and payroll, you can actually save a lot in taxes. We've had clients save tens of thousands a year just by changing how they paid themselves and the mix of the money that came in. So don't just blindly say, oh, I'm going to pay myself $300,000 and it's going to be amazing, because you are guaranteed that you are overpaying in taxes.
I guess some people just like to look at their paycheck stub and see that high number. It makes them feel accomplished.
Yeah, I had a buddy who was trying to purchase a large house, and he was a business owner. And so that's what he did. He's like, I knew that he wanted a very large, expensive home to purchase in California, and that required a large W-2. So for that year, he knocked his W-2. It was like 375 or something, super high W-2. And I was like, dude, you are killing yourself on taxes. He's like, I know, I don't have a choice, but that's what's going to take to be able to qualify for the $3 million house that's like 1,200 square feet, out in California. I'm like, all right, well, expensive process to get that house. Hope it's worth it. And then as soon as he got approved for the loan, he knocked his salary down to like 65,000. I was like, well, hope you don't get audited and have to explain that one.
Right. I guess that's strategy for some people, but nonetheless, that's the beauty of being a business owner. You can change your W-2, right?
Yeah. Yes. So, some key takeaways as we wrap up here, friends. First is make sure that you are classifying your workers correctly. Make sure that you are treating W-2 employees correctly. Make sure that you're treating 1099s correctly, that you have the proper documentation, that your payroll is set up, that as you're withholding that money, you're paying it out, because Alexis did point out even payroll processors can make mistakes. And if you're withholding that money and that's the state and federal government aren't getting paid on the whatever the cadence is supposed to be, they will come knock on your door and say, where's our money? And if you're like, oh, sorry, it's been sitting in the account, we just didn't pay it, they're not going to be friendly. So make sure that you set up the people and classify them correctly. Make sure you set up payroll correctly. And this is not something that you can just flip a switch and all of a sudden you have payroll. There are steps to take. You've got to get the withholding numbers, the account numbers, the rates for unemployment. It's a lot of work. So we highly recommend getting help for that. But payroll also is great for profitability and great for tax strategy, and opens up a lot of doors for wealth building as well for both you and your team through retirement. Alexis is licensed in for retirement and insurance and all those things. Those are huge tools that you can take advantage of once you flip the switch and implement payroll properly. So don't discount it. It is a great tool to use as you're growing and scaling your business, but make sure you do it properly.
Definitely. If I had one thing to add to that, I often see a lot of times when we're working with new business owners and they're getting acclimated to payroll lifestyle and all of that great stuff. And they think because they're having W-2 withholding taxes taken out of their W-2, that that satisfies the business tax portion. So I just, as we're having this conversation, just want to put out as, we're wrapping up here, that W-2 payroll taxes is for your W-2. You are still responsible for the taxes that you make on your income and estimated taxes. And if you're selling products, sales and use taxes. So there's a lot of taxes. So I just wanted to put that out there because, again, a few people have said, well, I'm paying W-2 taxes. I shouldn't have no more taxes. And I'm like, that's not the case. So just put that in your memory bank.
Yes.
And just remind yourself that there are taxes outside of the W-2 payroll taxes that you're
Yes.
responsible for.
Excellent point. Just because you're on payroll and paying payroll taxes doesn't mean you don't have to do your tax returns and your sales tax and your franchise tax and your property tax and all those things. It does not trump and rule out everything, all the other taxes. So look, if you are overwhelmed by all of this, please just go to pamjordan.com. Our team would love to walk you through this to determine, is payroll the right thing for you? Are your books in order? Help you with the tax strategy, because payroll really is a huge tool that you can use in your business to grow your profit and reduce your taxes and get more money into your pocket as the owner. But if you don't do it properly, it can also be a nightmare for you. So make sure that you are using a reputable group to help you process payroll properly and set everything up so that you're not exposing your business. So Alexis, thank you so much for this conversation about the wonderful topic of payroll. You had lots of gems for us today, and hopefully this has been helpful for everyone. Anything else, Alexis?
No, I think I'm good. I think I said a lot today. How about
All right.
that?
Perfect. So thank you so much for listening to Pivot to Profit podcast. Remember, it's not what you make, it's what you keep. We will see you next time. Thanks, everyone.